Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. A lot of people try to determine whether gold or silver is the better investment, the better purchase, which will bring them the most profits down the line. This video is going to be talking about why the gold to silver ratio is a useful indicator and also what it's telling us. Is silver the better investment or is gold the better investment? A lot of you probably diversify into both, but the majority of your portfolio should be on one specific precious metal that I will be talking about in a second. So before we start, we see silver at $17.35 in the green, gold $1,745 in the green, platinum and palladium also in the green. Really haven't seen that huge rally, that huge explosion that people were hoping for. In the short term, it's not looking too explosive, but the medium and long term for gold and silver, especially silver, is where the profits are going to really come into play. So you just have to be patient, and I hope you don't sell yourself short. So the gold to silver ratio is a great tool to use to see whether gold or silver is a better buy at that given time. We've seen the ratio up as high as 125 to 1, meaning it took 125 ounces of silver to equal 1 ounce of gold, making silver extremely undervalued. Historically, the ratio is around 16 to 1, so I don't see why the ratio would jump much more than that, because that's what it comes out of the ground. There's about 16 times more silver in the Earth's crust than there is gold. So you would think the ratio would be around that, right? Well, you're wrong. The gold to silver ratio is still sitting at over 100 to 1, meaning that silver is extremely undervalued. So anyways, let's jump into this article and let's see what it has to say. So there's a debate in gold bug circles over whether the price difference between gold and silver, the gold to silver ratio, tells us anything useful. Some skeptics, for instance, view the original gold to silver ratio of 15 from America's 18th century bimetallic system as just a political number pulled more or less out of thin air by Alexander Hamilton, and therefore useless today. Others note that gold is purely a monetary metal, and silver is a part industrial, part monetary. So silver kind of has two roles, and conclude that it's apples to oranges, and therefore not an indicator of future prices. Both points are factually defensible, sort of, but they're also relevant. The real reason the gold to silver ratio has tended to fluctuate within a broad but well-defined range is that humans have a vivid visual imagination. So here's how it works. Early in a precious metals bull market, people are skeptical of the need for safe haven assets. So the money that flows into the sector goes mostly to the big name super safe choice, which is gold. Gold goes up relative to silver, and the gold to silver ratio expands, and that's definitely true in the beginning. Everyone goes towards gold. It's a safe haven. Gold keeps rising in new money, much of it attracted by the metal's newfound price momentum rather than an understanding of the nature of the money flows in, pushing gold even higher. So people from stock markets come in. People from all over jump into gold, even if they don't understand the markets. The early gold investors register big gains and begin to feel smart, and therefore more willing to take on a bit of extra risk in return for potentially even bigger gains. So they look around for the next gold and find silver and other monetary metal languishing at a relatively low price. So they get into gold. They feel good because gold was rising for this, all this new demand is coming in, and they want more money. So then they look towards silver and say, oh, silver's still cheap, it hasn't appreciated yet, so I'm going to jump into the silver market and see if I can make the same gains I just did with gold. And that in return shoots silver's price up. So then silver outperforms gold. But silver is an industrial metal as well, so it has two things working for it. It's more susceptible to rise, especially since there's a smaller market. So next they consider the price of silver and envision how many also very pretty 1 ounce coins they can buy for the price of a single ounce of gold, and their imagination conjures up something like this. Suddenly, silver looks extremely cheap. For the price of a single gold eagle, one can get 2 heaping handfuls of shiny, heavy silver ounces. A bit more consideration reveals that in an SHTF scenario, silver coins are actually more useful than gold because their smaller denominations allow them to function as $20 bills rather than gold's a liquid $1,000 plus. You can buy groceries and bullets with silver coins. You can't do that with gold, right? Definitely can't do that with gold. Suddenly aware of silver's advantages, investors conclude that at current relative prices, the choice is a no-brainer. Silver is the precious metal to load up on. adjust this thought process for the global pandemic's distortion of most markets and convert it into this chart, you get the past 2 months gold to silver ratio, which depicts about a hair on fire panic followed by a trend back towards traditional norms. So what happens now? Historically, both precious metals keep rising, with silver rising faster than gold until the imagined pile of silver required to buy a single ounce of gold looks something like this. Then the process shifts into reverse, with a single gold coin looking better in the mind eye of the paltry few bits of silver. We are nowhere near this point, so we expect investor imaginations to work in silver's favor for years to come. So, still saying that silver is going to be the one that has the most potential and doing the most rising, definitely decreasing the gold to silver ratio, dropping probably another 30 points. If the ratio is at 100 to 1 right now, quote unquote normal ratio in today's times is probably around 60 or 70 to 1. I know that's still extremely high compared to its 16 to 1. And actually in the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1. And that was in the midst of the Great Depression. You can see everything that went along with that. But it's manipulation of silver's price at very large scales. So anyways, I have another article talking still more about the gold to silver ratio, but the dilemma that is silver. The devil's metal is how some traders refer to silver, not without justification. When investors expect it to perform well, it often seems to do the opposite. It has also been referred to as gold on steroids, given its historic propensity to rise far faster than gold in percentage terms when the latter is sustained uptrend. And that's definitely true. Silver is more volatile. But recently, silver has largely kept from former description, with the gold to silver ratio sticking at historic highs above the 100 mark. Indeed, at its worst, it hit over 120, a disastrous level for the gold or for the silver investor. The GSR effectively is a measure of amount of silver it takes to buy a similar amount of gold. Thus, the higher gold to silver ratio, the worse it is for silver. Historically, the GSR up until the middle of March has ranged between 16 and 100, and out of the silver bulls have tended to convince themselves that it will return to somewhere near the 16 level over time. We have tended to disagree quite strongly with that particular suggestion. And I don't see the gold to silver ratio going back down to 16. We have to be realistic. In a realistic world, it's probably going to go around 60, not 16. The last time silver hit 16 was in December 1979, when the Hunt brothers tried and almost succeeded in cornering the silver market. But COMEX rule changes rebuying on margin, which the Hunt brothers had been doing, put a stop to the attempt, and ever since the GSR has remained in the 30 to 100 range. Up until mid-March this year, since when it largely stayed above 100, peaking at a fraction over 124 on March 18th. Since then, it has come down to its current level of around 101, thus seeing good gains in percentage terms over gold, but from an exceptionally low and oversold level. So gold only recovered around 19%, silver recovered about 52%, so silver definitely did outperform gold when they were both at their bottoms in mid-March. So the out silver bulls see the 16 GSR level as true historic level. But silver usage has changed hugely since such a historic level was virtually a fixture. Back then, around 100 years ago or so, it was very much a monetary metal, with countries minting silver coinage and holding silver coins in their reserves. But nowadays, it is very much an industrial metal with investment overtones, with 60-70% of demand coming from global industrial sectors. As such, its price is very much beholden to the state of the global economy. True, it still tends to show some movement with the gold price, primarily for historic reasons, but the true historic correlation is probably no longer there, and the GSR range is likely to have suffered accordingly. However, there is still some big investor interest in the metal, which does signify that there may be something of an improvement ahead. This is being seen in particular in the big silver ETFs. As Ed Steer pointed out in his daily newsletter Friday, why all those so-called precious metals analysts out there aren't talking about the 44.8 million troy ounces that has been added to the SOV so far this month is a complete mystery. This is an enormous amount going into just one silver ETF, and looks to signify that some of the big money is moving in silver's direction, despite some of the adverse economic comment out there. As we said in the article a couple days ago, investors are seldom caught out of following the money. So perhaps there's some traction in silver yet to come. Devil's metal or no, we'll thus follow the path of GSR with some interest in the days and the weeks to come. Maybe there's a nice boost for silver investors ahead, but don't bank on it. So anyways, just goes a little deeper into the gold to silver ratio, and I'm curious where you think the ratio naturally should be, and be realistic. Don't say 8-to-1 just because it's coming out of the ground around that price. That's not realistic in today's times. Like I said, silver's not a monetary metal like gold is anymore. It's more of an industrial metal. So what is the gold to silver ratio in your terms? I think it's around 60, probably 65 to 75 to 1. Being realistic, if you want a normal level in today's terms, just meaning that silver does have a lot of catching up to do still at the ratio sitting at 100, but I don't think it's going to be going down that far. So anyways, I hope you enjoyed this video. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Let's see if this video can get 250 likes. Everyone, go like the video right now if you love precious metals. I think I'm going to wrap this video up here. The link to these articles will be in the description if you want to check them out yourself. This was Silver Slayer. I'll see you guys soon. Peace.